Good morning, everyone. Welcome to our Friday trading session. Actually, it's our Rabbit Hole Friday session. You got to bear with me here a little bit. I'm trying to close some windows here to get my computer to be a little bit more responsive. It's being a little bit slow. Okay, I think we almost got it. All right. Oh, not quite there yet. Still waiting on the charts to load. Between the screen sharing software and the charts I'm running, the poor old computer, the little hamster in the wheel, it's all it can do to keep up. Just kind of looking at the overnight, we have a really big gap. I know you can't see anything yet. But I do have the one chart that loaded. And I can see the market is opening at around 75.24 and it left off near 7600. So that's a bit of a plunge. Come on, computer. So if I don't crash my NinjaTrader, what I thought we would do this morning is look at stochastics. And I do believe somebody requested early on double stochastics. So we'll take a look at those. Oh, brother, come on. All right, I better not touch anything else here. It'll end up crashing the computer. So while I have you and while we're waiting for this, just a quick reminder, no trading room on Monday. I'm not available this Monday, unfortunately. There we go. Okay, we're getting warmer. One more chart to load. There, hooray. Okay, I didn't crash the system. Okay, now all the data loading for the last 5 minutes. Okay, so stochastics, we've done MACD, I think we've done RSI. If not, I'll have to feature RSI, but stochastics, a very popular oscillating indicator. I won't go into the background too much. It was invented by a fellow by the name of George Lane, and you can read all about him and how he came up with stochastics back in the 1950s. So it's been around for a while. What's interesting with stochastics, as is the case with many indicators, is that they were actually developed in many cases for the commodities markets. Here, before I load the stochastics, I'm curious to see whether the Bollinger Suite has a stochastic mode. Oh, look at that. It does too. So why don't we investigate that before we go into the regular stochastic? And it looks like it has your tweakable periods here. So stochastics, interesting. It has a K period of 8. Oh dear. There goes my screen again. There. All right. Come on. Well, that's a bit of a different look, isn't it? So with the Bollinger Suite, you would treat your stochastics the same as when we're doing it with the regular MACD, and you would be looking for, well, I think you would be looking for the stochastics to emerge from the Bollingers. I don't know if I like that quite as well. That should be getting bullish. It seems to be a little bit ahead of the curve. All right, let's leave that for now, and let's put a regular stochastic on here. So we'll start with the regular, then I'll show you the double stochastic, and then I'll show you a couple of stochastic things. Okay, you're going to notice we've got several stochastics here. We have the fast stochastic, the regular stochastic, which is technically called slow stochastics. It is a derivative of the fast stochastics. And then you have a stochastic hybrid between stochastic and RSI. We'll look at that another day. Right now, we're going to look at just the regular stochastic. And these values here tend to be the defaults for most stochastic settings. Stochastic also has overbought and oversold levels. And just briefly, the K period and D period are two different valuations of how the stochastic is calculated. And again, there's loads of stuff on the internet if you're interested in the actual math behind it. Most people aren't. Most people are just, give me the indicator, show me how to use it. There's two basic ways to using your stochastic. One is to use your overbought, oversold areas, which are your highs and lows up here, your little bands. Stochastics are a little bit finer tuned than, say, something like RSI, which usually has levels at 70 and 30. Stochastic is a little bit more extreme. It has overbought and oversold levels at 80 and 20. So the idea here is that once the market gets into the overbought region, you look for it to come out of the overbought region, and that would generate a sell signal. If it's in the oversold region, you look for it to come out of the oversold region, and that would be a buy signal. Now, what surprises a lot of people is that that actually works pretty well if you take trend into consideration. So if you have a situation where there is no trend, the oscillator is going to keep bumping around. The funny thing is, oscillators were developed for oscillating markets, hence the name. And yet, if you use them in a trend, they're actually not half bad for initiating triggers. You see, they were developed for oscillating markets, hence the name, because it oscillates between a value of 0 and 100, that you could capitalize on these short-term swings. So here's a little swing higher, here's a little swing lower, here's a little swing higher again, here's another little swing higher. So you can see the moves are relatively small, but if you're fast enough, you actually could pick up a few ticks, certainly enough for scalping. The other way of trading stochastics is to observe the crossovers. When your faster line crosses over your slower line, and this usually occurs at the extreme points that you're most interested in it, it could generate a sell signal, as it did in this instance here. We have a sell crossover. We have a little buy crossover and the market emerges. This one didn't go very far initially, but you can see it eventually did get some giddy up. But if you take a look at your stochastic and you use it in conjunction with trend, so for instance here we're going to use it in conjunction with the Raptor band, and I'm just picking on the Raptor here. Of course you can do this with any of the different tools. But if you look for the bullish cross or coming out of the oversold regions, so long as it is in conjunction with trend, you actually get some pretty reasonable signals, right? Here's a nice one that showed up on your stochastic. We did have a buy signal here on the Raptor, but that's, just to look at it, that's just kind of like your average buy signal. Should I take it? Shouldn't I take it? And yet the stochastic was saying, yeah, go ahead, buy it. The market is bullish. So stochastics can be helpful that way to help with your timing. Here's another crossover. So that would make us on the alert for a possible buy signal, right? So we could look to take advantage of this buy signal, perhaps throw an entry in above there. The stochastics remain bullish. Oh, nothing just yet. Okay, another bullish cross. Oh, and there's our number 3 signal now. So we could get on board with that. And that actually had some fairly decent follow through. Now, when you have a bullish trend, as determined here by our Raptor trend lines, you're going to want to ignore the counter trend. You're going to want to ignore any of the sell signals. Let's go here into the overnight where we know the market came down. All right, so here the market's kind of sideways, right? There's not much going on. The oscillator keeps bouncing back and forth. Here we're starting to come out of the oversold region, but at this point, things are still looking a little bit dicey. Now we're starting to actually develop a little bit of a trend. Okay, and there's a little bit of a pullback. The oscillator is getting up here in the overbought region. We have a bearish trend. So this is something now that we want to pay a little bit more attention to. Okay, here now is our bearish cross. So we've crossed over to the short side, and this would make us on the alert for a sell signal. Don't have it yet. Dipped up here again really briefly in the overbought zone, still no signal. Okay, another bearish cross. And again, all I'm doing is trying to look for timing signals via the oscillator given the overall market trend. Okay, here now, a nice bearish cross and a sell signal. It's funny it didn't print as a number 3 signal, but that's what it is. It's in the hard edge. It's a number 3 signal. So here we go. There's a signal that should give us a little bit more confidence timing wise. And oh, it did turn out to be a number 3 signal. There we go. And well, not bad follow through, certainly enough to find your first profit target. Here we get another bearish cross. It got just ever so slightly overbought, but it's still crossing. It crosses in the neutral zone because it's neutral, are open a little bit to interpretation, but we do have a trend. So there we go. We have another cross and another nice trade. All right, so that's just your most basic way of using your stochastics. Now, stochastics, probably more than any other indicator, is susceptible to tweaking. Stochastics can be made very responsive to the market that you're trading. I'm not sure I've ever traded stochastics with just the defaults. And before we make any more changes, let's take a look here at the double stochastic. So the double stochastic is actually something that's kind of unique to NinjaTrader. I don't think I've seen this indicator anywhere else. And what it has done, it has smoothed the regular stochastic. Hold on here a second. I'm going to remove the filter for now, just to give us a little more screen real estate. You can see it doesn't drift that far from the regular stochastic. It is a slightly different, gives you slightly different values, but in one sense, it's a little bit easier to interpret. And with the double stochastic, I would use it much the same way, in that the signal has to be in sync with the trend. There's one thing you will find if you're leaning towards using stochastics: you have to have something on your chart to determine trend. Now, with the raptor, the falcon, the eagle, even the hawk for that matter, the trend is very important. We've taken great pains to try to find ways for you to identify trend. What you would do with the double stochastic is just quite simply the same thing. So back here, where the market's not really has a discernible trend of any sort, you see the clouds are starting to intertwine, the clouds are getting very flat. That tells you there's no real trend in the market. And you can see that in the oscillator. It's back and forth, back and forth. Once you have a trend beginning to develop, however, then you can look for the market to get into the overbought region. And the overbought because I'm looking for a bearish signal, because that's the way my bands are stacked. Now it's come out of the overbought region, so it's suggesting that the market's going to try to head lower. No signal, no signal, no signal. Okay, here we go again. Back in the overbought, comes out. No signal. Okay, now we finally get a signal. Does it concern me that the indicator is all the way down here? No. Why not? Because I'm not in an uptrend, right? According to my bands, I'm in a more bearish posture. I'm in more of a downtrend. And therefore, I'm only going to pay attention to the signals that come out of the overbought region. So the market signaled that it was going to get bearish. Here, my Raptor signal finally prints. And so I can take advantage of that. And here we go again. We're overbought. We're coming out. There's my signal. And decent follow through. There we go. We're overbought, coming out. Here's my signal. And oh, we're starting to lose our trend, are we? Come on, get down there. Oh, there we go. So we took a little bit of heat on the trade, but we did end up recovering. Okay, here we are, overbought. Again, it is important that it does get into this overbought region. If it comes up short, that might be an indication that the market's going to start changing direction or potentially change direction. Okay, so here it comes out of the overbought. Here's another signal. And get anything out of that one? Come on. There we go. Finally get a little bit of a move. And a much better response to that now. See if they give us anything else. So here we are. We're still very bearish, very bearish. Here's another overbought signal. Okay, so now you sit up, you take notice. Where's the signal? Where's the signal? There's the signal. Oh, taking a little heat on this one. Okay, once again, overbought. Where's the signal? Come on, you guys. Oh, there we go. So this signal, unfortunately, did give us a little bit of heat. If you left a reasonable stop, 2 swings back, so there's swing 1, there's swing 2, you would have done okay. The second one worked out a little bit better because you were actually able to afford a slightly tighter stop. Let's see, did that follow through as well? Yes, it did. So very good follow through across the board. Okay, let's get now to where we're a little bit more bullish and see if it responds to us in a bullish way. Come on. Oop, sorry, went too far. All right, so here now is the market's very neutral, right? We're flip-flopping back and forth. There's no real signals developing here. Now all of a sudden we're starting to get a more bullish looking band. So we're going to look for the oscillator to become bearish and then hopefully get us a signal. Okay, so there we are. We're very oversold. And where's my buy signal? There it is. Here's my buy signal. And good follow through on that one. And once again, you can see an advantage to using the indicator this way is that it does normally enable you to get away with a tighter stop. That one trade I showed you did not work out quite so well, but these other ones so far are not bad for tight stops. Okay, here we are. We're oversold again. Where's my signal? Right here. So I'm ignoring the top side, right? I'm ignoring all these fluctuations up here because I'm concentrating on my trend, and I'm looking for instances when the market's going to come out of the oversold region. We've got the same kind of thing going on here with your stochastic. You want to temper your stochastics with something that indicates trend. This is where a lot of people go sideways when they're trading or trying to trade stochastics, and they get all wrapped up with the indicator and tweaking the settings. Stochastics is probably the most tweaked indicator of them all. And that's because they're trying to eliminate the bad counter signals. But you never will, because it's an oscillator. It has to oscillate between 0 and 100. That's just the way the math works. Okay, so that signal did not engage yet. Here we are, we're oversold again. You can see with the regular stochastic, very oversold. We're going to get a bullish cross. Where's my signal? There's my signal to buy. It looks like this time we did get engaged. And there we go. We got another here on the double stochastics. We got another crossover signal to buy. That would be this one right here. And regardless, we had some very nice follow through off both those. So there's just a very simple way of trading your stochastic indicator, or if you prefer, your double stochastics. Now, like I said, stochastics are infinitely tweakable. People love tweaking their settings on stochastics. Here, the double stochastic, you can see the default is set at 10. I've always been one to, you're searching for numbers to throw into your indicators. I've always defaulted to Fibonacci numbers. No special reason why. I will throw, say, like a 13 on there instead of a 14. And then I'll just take a look and see how the indicator responds. Am I happy with how the signals are printing? If I feel I'm still getting too many false signals, I'll make it a little larger. So I'll go, say, to a 21 period. This is going to start smoothing things out considerably. You can see how we're eliminating a lot of signals, a lot of the whipsaw type stuff, as your values get larger. And when you're playing with it like this, what you want to do is you want to compare your signals. So you have an oversold condition here. It comes out. Do I have a buy signal that coincides, and is there good follow through? Yes, there was very good follow through on that one. Let's see here you also want to examine these choppy periods. You want to make sure that you're not getting too many poor signals. So here's a choppy period, poor signal. There's my number one signal. Okay, that one worked out all right. Again, I'm going to default to whatever the trend is, even if it doesn't look like there's a trend, right? I'm going to ignore the counter trend attempts. I'm going to ignore the number two signal, essentially. So here it looks like we have a little bit of a choppy phase again. The market was oversold, gave a buy signal. Okay, no, it's out of sync. Yes, it was overbought, came out, produced a sell signal right here. Okay, not bad. gave you a little bit of heat, just a couple of bars, and then descended lower. So I'm not minding the wider settings, the broader 21 zone. Here's another, we're in a downtrend, obviously. Here's a couple of sell signals. Here's my number 3 signal to short, and that one also working out quite nicely. So yeah, it looks like the bigger values would make for a very nice filter. This is also helpful sometimes when you get those runaway markets like we saw, well, actually yesterday morning and the day before as well. A lot of times you're panicking, where can I get in? Where can I get in? Well, your oscillators will still be oscillating, and sometimes that can help you discern a follow-up signal rather than having to wait for one of the high probability signals to print. You can perhaps take advantage of just your regular plain Jane follow-up signal. Looks like most of these double stochastic signals with the larger 21 period are lining up pretty nicely with the high probability signals on the Raptor. All right, let's take a look here now at the stochastic again. Like I said, people love to tweak their stochastics. They love tweaking it so much that a lot of them will even use 2 stochastics. And I should change the colors of these so we can keep them straight. Okay, let's make it violet, and there, that'll be pretty. Okay, we'll just get these to load. Okay, what I'm going to do now is, like I said, the stochastics, people love playing with their stochastics. There's all kinds of fast settings. For some reason, 5, 3, and 3 are very popular. So a K period of 5, a D period of 3, and a smoothing of 3. I've even seen some people speed it up some more, and you can play with this yourself, but with a 5, 2, and 2 on your fast. And then on your slower one, you can really slow it down. So you can go with, say, a D period of 5, a K period of 21. And again, these are just Fibonacci values, and a smoothing of 8. All right, let's see what this does. Okay, not bad. Now, this is going to be a little confusing, but it's funny how well it can work. I've never tried it on a mean Renko chart. Years ago, when I used to play with stochastics more, this would work pretty well on a time-based chart. But let's see here what we can do with the mean Renkos. What you are looking for is you're actually looking for the faster stochastic to be opposite your slower stochastic. What your slower stochastic values are showing you when it gets into this oversold region is that the market is actually entering a trend. At this point, you want your faster stochastic settings to become overbought. And the idea is when they come out of that overbought region, you're going to look for a signal. So it's opposite. We have a trend developing when the slower stochastic setting is entering either the overbought or oversold area. And then when that occurs, we're going to be looking at the faster stochastic to go on the opposite side and to come out of the overbought region, which would suggest a short signal. So here we are. We're looking for sell signal, and now we're looking for opportunities to short. So there's an opportunity back here, another opportunity here, another opportunity here, and another opportunity here. Once again, I'm ignoring, well, it helps to have something resembling trend. In this case, we're going to stay with the rafter clouds, but we're essentially ignoring the counter trend signals. So stochastic says we are short. We remain short until both lines end up in the overbought region. Out of all these signals, only this one and this one triggered. And you can see you could have got in early on this one. You would have taken a little bit of heat, nothing too terribly serious, but then the next one had some very nice follow through. Here again, we are in a downtrend. So we're going to look, we're in a downtrend. We're looking for a signal to emerge. We have a signal emerge right here, which coincides with this signal right here. The market continues lower. Here's another signal. We become overbought on the faster settings. There's the signal, there's the short, and here's one where the short signal does not qualify as one of our high probability signals, and yet it had some decent follow through to it. Let's see how we do here to the upside. Notice here during the chop periods, this would suggest the market is becoming bullish. Here, let's roll this over. Okay, so stochastics say the market's becoming bullish. The bands are starting to stack bullish. We're down here in the oversold region looking for it to emerge. There it emerges. Okay, it's a little bit up in the air whether we want to take this signal now, because our bands are starting to cross. Our bands are starting to get a little bit more neutral again. But let's see if we get a signal to print. No signal, no signal, no signal. Okay, so it's not quite ready yet. We're still mildly bullish, although our bands are starting to twist over, but let's just say, okay, so we have, well, technically the band was out of sync. The trading band was out of sync. But let's say we did take it. So here is the signal right there. Here's the signal that prints. And oh, we get a couple of ticks and we take some heat. No, it didn't work because the bands were out of sync. Like I said, you need something that's going to help determine trend. Bollinger's. Stochastics work well so long as you have some sort of trend filter that you can rely on. Okay, so here we are. We're short again. You can see the stochastics suggesting the market is bearish. So we're going to look for the faster setting to get up here. Okay, gets up there, gets up there. It's going to break lower. So now we're going to be on the alert for perhaps a shorting opportunity. All right, here's my sell signal. And there's the number 3. So initial stops are up here. Oh, it's giving some heat. Oh, it's not going to work out. Okay, well, there you go. That was a valid signal. It did meet the requirements. We had a bearish band. We had the slower stochastics saying the market was in a downtrend, and then the faster stochastics producing the signal. But, well, there's an instance that it did not work. So it goes to show you there are no perfect systems in trading. At this point, the context is starting to look a little dodgy. So we're going to be looking for things to become a little bit more defined. Okay, here we are. The slower settings are overbought, suggesting an uptrend. And now we're going to look to the faster settings for a signal. Oh, there's a cross. Darn it, it didn't get below. There we go. It got below and it comes above. And where's the buy signal? Where's the buy signal? There's the buy signal. And that one had decent fall through. Okay, the slower ones overbought again, so we have an uptrend. Where's the buy signal? Here's the cross, so we're looking for the buy signal. And there's the buy signal. I guess that one didn't fill, but now we're getting a little bit of a possible trend change going on. See that, how it became oversold? So we're going to be holding off until we get up here again. Okay, we're bullish. Now we're looking for the cross. Where's the buy signal? There's the buy signal. This one did fill. And a decent amount of follow through on that. So it's like I said, it can be a very reliable filter. Here, let's go to the current market, see what's going on. Okay, so we're in a downtrend as defined by the slower stochastic. So we're going to be looking now for a signal to short. All right, we're going to come out of here. The bands are still stacked bearish. Oh, look at this. We may be creeping into a buy situation, into a more bullish environment. Oh, look at that. We're bullish now, according to the slower stochastic. Let's see if we get a signal. This may actually lead to a little bit of a sideways market because we're getting some conflicting signals. Okay, we're above the bands now, so that's a little better. Because the trading band is still very bearish, or for the most part bearish. Look at this, the faster one is stuck at 100 and it's maxed out. And the slower one is almost there too. Oh, baby. When we talk about Williams percent R, I'm going to show you something that's a little opposite of what most people do with percent R. But you know what's interesting is how often when the oscillator is at an extreme, how many times it actually develops into a bit of a trend. Okay, so we're definitely bullish. We are oversold now, so let's see about the next buy signal. And you know what? The market is so bullish, I'm just going to pop in with a buy signal once the faster one has emerged from the oversold zone. Okay. So I'm just going to take it on a blind buy signal because this is out here. We haven't had the signal develop just yet. Okay, there now is the actual Raptor signal building. And I'm doing this, I did the early entry partly because it was so extreme. It's making me wonder whether it's going to develop into a little bit of a stronger trend. So I'm going to trail below this bar with the tail to it. The best stop is break even. But hey, we're flirting with about 150 bucks right now. I don't want to let too much of that get away. The indicator right at the extreme again. Look at that. Just trying to hold on to a little extra profit here. I was trying to keep my stops 2 bars back, but I guess that wasn't enough. What settings did I have there? Oh, I had the 252. Like I said, another popular one, and I'm not sure why this became so popular, but it did, was the 3-period for the D, the 5 for the K, and a 3 for the smoothing. For some reason, it almost seems to be a universally accepted stochastic setting for a faster stochastic. You can see we're getting the same kind of input, maybe not quite as jagged as the other one for the 252. Some people will look at stochastics for divergences. I don't so much. I think there's better tools for divergences than stochastics. I think if divergence is something you want to focus on, then you'd be hard pressed to do better than RSI or MACD. I think they do a better job of spotting market momentum changes than stochastic does. But you can see it's just a very simple and user-friendly way to try to stay on the right side of the marketplace, try to improve your timing. Yeah, I think I like the 252 settings. It gets a little bit more extreme. So here we are, we're bullish. We're looking for a buy opportunity, so that signal would have printed right here. And again, a very nice little move. Does anyone have any questions about that? Like I said, stochastics, you can tweak to your heart's desire. I think they are probably the most tweaked of all the indicators. Very popular indicator. Nice thing about the stochastic as well is that it's universal, right? It comes on every charting platform. Ron's asking, can you talk about Williams percent R? I will. How about we feature that one next week? Unfortunately, I'm out of time today. I do have to close up the room here this morning. But just briefly, Williams percent R is another oscillating type indicator developed by none other than Larry Williams. The guy is an indicator machine. I'm curious to see how NinjaTrader plots their percent R, because percent R is an inverse indicator. It usually plots upside down. No, they flipped it. Usually it would be, you'd have the 0 down here and the 100 up here. Okay, I'll have to play with the Ninja version and see what they've done with it. All right, gang. Have yourselves a wonderful weekend. Remember, no trading room on Monday. I will see you on Tuesday. If you are going to hang out here the remainder of the day, well, it looks like the buyers are taking the sellers to the woodshed. Looks like it's going to be a bullish finish to the week, which will be nice. So keep an eye out for those buying opportunities. Oh, we had another buy signal right there. Look at that. Gee, that's working well. So another overbought, we're bullish, another buy signal, hop on board, another buy signal, hop on board, another buy signal, hop on board. Wow. Okay, be careful out there. Have yourselves a great weekend. I will talk to you Tuesday. We'll see you then. Bye for now.